Hey, this is Eli, aka Devoted Day Trader. On today's recap, I'm going to focus on when it is safe in a high probability trade, taking a pullback to the 20 EMA in a strong trend. It took me a while to see this pattern, but I've been testing it out and it seems to really work. I'm gonna use examples from my trades from today to make my point. And I traded TCOM and LVS today. So let's start with TCOM. So TCOM is a Chinese company, I believe, a traveling company, and it was downgraded this morning. So it had news, but despite the news, it made a huge move to the upside. A lot of people were probably short biased, but I was looking for my bread and butter strategy, which is looking for stocks that have gapped down and are looking to fill the gap. So this took two attempts. The first attempt, I got out because I didn't really like what was going on. So in the open, it sold off. So the bears dominated the first bar. The short entry triggered right here, and a lot of people went short, but they didn't make much progress. Seeing that, I went long right here, but when it came back down, I got out because I got in as soon as the high of the second bull bar was violated, and I was expecting it to continue pushing higher, but once it came back down, I got out, and good thing I did because the fourth bar was a huge bear bar. But after this, I did not trade it. But what happened was basically the stock had a climatic open. So this is a climax bar, a climax sell bar. The first bar, the second bar, and then after that it pushed higher. So now let's get to the pullback to the 20 EMA. So I noticed a pullback to the 20 EMA in two legs. So what does this mean? Okay, so I'm looking for a second high in a pullback. So if we were to count the number of pullbacks, just bear with me for a second here, because if you get this is going to make you a lot of money. So it made a new high and then no 5-minute high. So low, it did not make a new 5-minute high. So the first 5-minute high was right here. But what I have realized and noticed is that usually the first 5-minute high and a pullback to the 20 EMA, it usually doesn't pan out. So it's best to wait for the second 5-minute high. So it made a new low and another low, and then it made a 5-minute high. So when I went long right here, this bar violated the high of this bar. So in this pullback, this is the second 5-minute high. My stop was the low of this doji bar right below the 20 EMA, and then after that, it just went in my direction, and I locked in profit here, and I took the rest off here. I mean, this was a great trade. My risk was only this much. I risked 1% of my account, and I got this much. The other thing to mention is that on the daily chart, it did bounce off the 200 moving average, and I don't look at right now. I'm trying to keep my moving averages to only 1 to the 20 EMA, but sometimes I do look what the 200 is doing, and I noticed that the 200 was above, and it looked like it was a target. So when I went long here, I was comfortable holding because I knew that it's likely going to test the whole number of 36 or this 200 moving average. And the other reason why I took profit here was in pre-market. There was a pre-market pivot, so I thought it could potentially struggle here. So that's why I took my first profit at 35.77. So this was a great trade. I did have another trade on LVS, which was also a winner. Again, I was looking for LVS to fill the gap. These plays have been profitable lately. Just wait for a stock that is gapping down and wait for it to see if shorts are trapped and see if it could fill the gap. So this one, it didn't quite fill the gap, but it did make a huge move. So in the open, I saw the this double bottom right here. So the shorts who went short here, because the second bar at some point was a trending bear bar. So people probably went short here, especially those who are using like the 1 minute time frame. I mean, that's why if you're not a profitable trader and you're using the 1 minute, let that 1 minute go. I used to use the 2 minute, and you have to be exceptionally skilled to make money using the 1 or the 2 minute time frames. I mean, you have to be like the top of the line. If not, it's best to stick with the 5 minutes. So if you're in a, I don't know, if someone is telling you that you can make money using the 1 minute chart, run from that person. Anyway, so I went long here because those who went short here will probably have to cover. And it popped. It actually gave me a 2-to-1 because my stop was right here. So this was my risk. It gave me a 2-to-1, but I was waiting for it to fill the gap. And if you want to see an example of buying the second high and it pulled back to the 20 EMA right here. So it made a new high. So this is the first high right here, and this is the second high. You put your stop right here, you take the second high, and it would have given you a decent move. This one was supposed to, well, not supposed to, so I pretty much got out once it lost this channel. So because it spiked, it pulled back, it transitioned into a channel, so that's why I was comfortable holding. But once it lost this channel, or the bottom of this channel, that's where I got out. And a good thing I did, because it literally pulled back to my entry price. So this, but nonetheless, this was still a I risked 1% on this trade, and I made about 1.2% or something like that. So these were the trades today. So the key is, when buying a pullback, wait for the second high, not the first 5 minute high, the second 5 minute high, and those trades usually result in a high probability trade. And if you're using the 1 minute, run away from it. If you have any questions or comments, feel free to comment below, and I will see you guys next time. Peace.